So now we are up to the stage where we're going to talk about the economics of the stock market, which is a nice to know, not a need to know for a trader. We are very fortunate with the We Make Mints team that we have an individual that has a degree in economics, and all of that content has come from that person. We're going to talk through two commodities that you may want to watch for signs, because they can give us clues as to the state of the economy and also with the stock market. The first being copper. Now, copper is used when we build cars, factories, homes. Things, when they are being built, it is a sign of a good economy. The economy is growing when all these things are being built, putting more demand on copper. If there's a bigger demand for copper, then the price will rise. So a rise in price in copper is a good sign of a healthy, growing economy. And we recently saw this with Asia. Basically, China and India being developing nations, they had a bigger demand for copper as more factories, etc. were being built, pushed the price of copper high. Now, if copper starts coming down, it's not a sign that the stock market's going to crash. It just might mean the economies around the world are starting to slow up a little bit, which isn't the worst sign in the world. The other commodity that gives us clues as to the state of the economy is oil, crude oil. Now, crude oil in general doesn't really have a direct correlation. You can't really say crude oil goes up and the stock market goes up and then they both come down together. But what you could say is, with a healthy economy, there is a good demand for oil. If there's a good demand for oil, the price should increase. So if the economy is doing well, arguably the stock market should be ascending, and oil also should be, because the more people in work, the more people that are buying things online, which takes oil to transport them via airplanes or trucks, etc. Also, the extremes of oil as well, prices. When you have a crisis around the world that interrupts oil supply, it does shoot the price of oil upwards. Now, that might not have a direct influence on the stock market if it's seen as a temporary thing. But if oil starts to get too high, it does have a negative impact on the stock market. Basically, how this works is, if oil is very high, then it costs more money for companies to transport their goods around the world. So if they are paying more prices for oil, then their profits are getting hit. If their profits are taking a hit, then people's valuations of them companies start to come down. So the share price may come down. So in 2008, when we had the stock market crash, you might have noticed that the price of oil absolutely shot up. If that happens and it looks like oil's going higher, people will start to show weakness in shares and the stock market. So always have a little look at what copper's doing and also oil, for looking for clues on the economy.